Well, hello everyone. K Kim here from the Traders Club, 2tradersclub.com, and welcome. Thank you for tuning in once again, and hope you guys had a great Thanksgiving holiday weekend. I hope you guys are enjoying your week thus far. Today is December 3rd, Wednesday. It's about 30 minutes after market has been closed, and I do want to start with the Russell today. Actually, before I get to it, I want to do a quick announcement here as we are, heading towards the end of the year. I just want to let you know that 24th, the live midweek update, has been canceled due to the Christmas week here. Same thing with the 31st. This one will be a more of a static recorded video, also be canceled due to the New Year's Eve. So we actually have about 3 remaining live midweek update here. We got one last live midweek update remaining next Wednesday. We will do that one. I will have the meeting room open. You guys can come in and hang out with me and watch me do things live. And so next Wednesday you can do that. Obviously, if you can make a recording, will be there. And then one last midweek update on the 17th, which is gonna be static recorded video. And so we got, including this one you're watching right now, we got 3 sessions remaining, and then 1 live session in 2014. And going into next year, January, we're gonna resume with our live midweek update schedules every other Wednesdays, and then every other Wednesdays, and every other Wednesdays we'll do the static recorded video, something like you're watching right now. So if you haven't signed up for that for 2015, just go ahead to my my blog, or probably there's gonna be a link wherever you're watching this video. Go here and then just go sign up, free webinar, and it will bring up to this page. Just put your information there. What it's going to do is it's going to give you a meeting reminder about an hour before, so you can able to sign on and listen to the or attend the events there. You just sign up one time, and then you'll be signed up for the whole year. And it's very easy to opt out. You just opt out. You just reply to any those reminder emails, and then you just say opt out, and then it will remove you automatically. And so obviously, I'm not gonna be, or the webinar platform, they're not gonna be selling your information at all. So if you haven't signed up for that, sign up for the 2015 midweek update. So I just wanted to give you a quick announcement on that. Let's get to it here. So today, like we always do, we're gonna look at equity market indices. We'll look at Spider, Dow Jones, Nasdaq, and Russell. I don't know if we need to look at financial, but we'll look at that here. And then I'll try to forecast, of the equity indices for the remaining days here in this week, and then possibly next week. And then we'll look at Apple and Tesla and Facebook today, and then we'll end the video with that. So obviously, I do want to start with the Russell first, because obviously, one of the big scenario, or one of the big thing about the Russell is that, while the other indices are continuing in this primary uptrend with higher lows and higher highs in a primary term, well, Russell pretty much moving sideways here for about a year. This did look like potential topping pattern, which it could then result in market correction. However, with other indices not participating in this topping pattern, right? It was only the Russell forming this topping pattern. We didn't have any kind of topping signal or the reversal pattern. None of that on the Dow Jones or the Spider or the Nasdaq or the financial sector. It was only the Russell that we had that we started to form something. Pretty big scale. As I see it, this is about a year. It's about 1 year of a cultivation to put this thing together. That's a work from the bears, and right now what the buyers, what the bulls trying to do is nullify this. That's what they're trying to do. So there's a lot of tension in this vicinity right here. This is a prior resistance, potentially becoming another resistance level here. This is what we call a neckline, because it came down and it got back up and came back down again. So the question is, are we forming maybe some kind of a double top, or potentially even be a triple top? What happened to my, oh, that just moved there. You know, it's gonna be, if it goes up and down, is that gonna be a triple top, or is that potentially gonna be like maybe some kind of a double bottom continuation pattern, right? At this point, we do not know, because it is sandwiched between this level right here of resistance and this level of support. So at this point, I don't know, you know, we would have to see next few days if we can able to close above that. Possibly then we can continue back up here 120-ish level, and if this thing gets below this level, then things gonna be much more hectic for the buyers. And so this is a level where they're starting to, you know, trying to test each other. They're trying to figure out what's going to happen. So that's what we're kind of starting to move sideways here. So as far as, you know, just pure price action is concerned, benefit of doubt continues to go to the buyers in the minor term, intermediate term, and the primary term, because of the fact that we're still above 1020 MA, we're above 50 MA, we're above all the moving averages. And looking at a big grand scale, you can see that we're still in a grand scale primary term uptrend. And you know, one of the thing about it is, I thought we're gonna do some pairs, we're doing something here with the potential lower highs and lower lows, and with this recent move, it's making things very difficult for the bears to do anything at this point. So I think, you know, definitely the level to watch this rest of the week is definitely this level here. See if we can able to get above that level. If we cannot, definitely next week, if this thing falls back over, then it's this level, about 114, 115-ish level, 118, 119-ish level is definitely level to watch. However, there are certain insinuations, there are certain signals, not a confirmation. You know, we have some of the insinuation signals that needs to be substantiated by the price action. So please keep in mind, as I show you this, I'm not saying that because of this signal we're bearish. That's a lot of times that's the problem with a lot of new people, or people who doesn't really truly understand how to use technical analysis for their advantage. They use these signals and then they conclude that it is bearish. Well, what you have to understand is price action is always a king. Everything else is subordinate to that. And then the signals and the insinuations and these indications, they can give us potential outlook, the potential forecast, but they needs to be substantiated. They needs to be confirmed with the price action, right? Like I just said earlier, benefit of doubt still goes to buyers as long as we're above this 50 MA on the Russell and about 115-ish level, this support level here. As long as we're above that, benefit of doubt continues to go to the buyers in the intermediate term and the primary term. But what I'm saying with this insinuation is, they are insinuating, they are signaling there might be some bearish outcome. Again, it needs to be substantiated. It needs to be confirmed by the price action that it gets below this level. We're not there yet. We don't have a tangible data at hand right now to confirm these insinuations. But I want to show you these insinuations because that could potentially mean something later on. Not right now, though. It is just plain signals, you know, plain indications, insinuations, which they're always everywhere. Again, all these signals needs to be confirmed and substantiated. So right here, what we're seeing is, you can see the MACD coming down. Okay, this is a MACD right here. You can see that this blue line right here coming down and the red line at the top. And as you know, as we're kind of forming this kind of a resistance level at the top here, kind of a little bit higher low, you can see how they are sloping down. This is what we call bearish divergence. So what this saying is, what this is insinuating is that there are certain clandestine selling pressure. There's some unknown, there are people hidden secretly selling, right? And so what he's seeing is basically we had this bullish move plainly what he's saying is bulls are getting tired. The bulls wants to push because we're still in an uptrend, right? We're still above all this moving average. Potentially doing a grand scale, or we've been moving sideways on the Russell, but in a grand scale we're still in an uptrend. Intermediate term, we are still above all the moving averages, so potentially we don't have solidified trend per se, but the wind is still blowing to the upside. You know what I mean? They are still the current, the stream is still moving to the upside, but you can see how we are seeing a little bit of that pressure right here, a little bit of kind of a secret selling pressure we're seeing here. We've seen stuff like that in the past where, you get this a little bit of higher low here, and then, you get a little bit of lower high on the MACD, and then you get a little bit of sell-off there. And the same thing happened right about here. Got a little bit of higher low, so, small scale, but, but then MACD really didn't follow that. We kind of had equal highs, and then we came down here. And then here we're having something similar to that. So you can see how we are seeing a bit similar sentiment happening here. Again, just because it happened in the past doesn't mean it has to happen here. No, it does not mean that. It does not mean that just because it happened in the past does not mean it has happened. That's why, like I said, we need to make sure that these signals can be substantiated with the price action getting below 114.15-ish. If we can able to get below this level along with this signal that we have right now, then at that time I would assume that it's going to come back down to about 108. Worst case scenario could be about 103 or even below. 110. So I think some of those levels can be a support level here, 110, 108. If we don't have any data to suggest that's what's going to happen, right? So this is something that I want you to watch next few days, or it probably going to take more than a few days. It probably going to take maybe a week or even 2 weeks before it can be fully confirmed. But once we can able to close well below this neckline right here, about 114.81, 114.50-ish, then I think at that point there's going to be much selling pressure. And if that happens on the Russell, that could potentially drag other indices down. However, I'm not sure, without the potential any kind of topping pattern that, without any kind of topping pattern on the indices, I'm not sure how much it's going to come down. I think it's just going to be a kind of a smaller short-term pullback here. I think the worst case scenario might be that it might come back down to about 200 or even fill this gap at 199. Again, I'm not suggesting at this point that that's what's going to happen. I'm saying if the Russell can have that confirmation of the price action, I think that Russell can able to drag other indices down with it. But I don't think without the proper topping pattern, this is not the level, or this is not the place to start to shout things out saying the market is going to crash, or we're all doomed. None of that stuff. I think the trend is still up, so benefit Dow continues close to the buy. You can see how we look at a primary term. We have not yet to form any kind of topping pattern. We don't have it on Spider, we don't have it on the Dow Jones, we don't have it on the Nasdaq, we don't have it in the financial sector, nothing. We are getting to the resistance level. However, you can see that we're kind of grinding at that level here. Again, we don't know how long it's going to grind. You could, and for all we know, it can grind for about 2 months. You can see that how he grinded for 2 months here. You can see this was about how long was it? That has been about 3 months or so. That has been about 3 months. You continue to grind at the top level there. So at this point, who knows how long it's going to grind like that, right? So that's the thing about it, is this is why we use language like benefit doubt, because the fact that we don't have anything to conclude that this thing must roll over. It's extended, yes. Just because it's extended, that does not mean that it must roll over. It's extended, it means we might not get a straight up move, that it can grind. You can grind like this, or we might form some kind of a topping pattern. Again, that's what I was saying. My article that I wrote maybe 2 days ago on S&P 500, where I said that the tough weeks ahead for the equities. I think we could continue to grind higher, but this is a potential level we could possibly start to form some kind of a topping pattern. I'm talking an intermediate term, nothing in primary, but intermediate term there. If I go to oscillators here, you can see how what we're getting at here. You can see where we're at. This is a chart that I put out on my last article on the S&P 500. You can see that how you know, we don't get to this level that many times, about 2.65 level on MACD here. This is one time that we did that, and this is a second time we did that, you know, within last several years. And then this is a third time that we got to that level. Just because we got to that level does not, again, it does not mean that it must roll over. But when it does roll over, we might see something, you know, bit of much pressure because of the buying pressure, you know, that right there, when we had this move right there, that was a lot of buying pressure. That was, and bulls gave everything, right? We did not form any kind of higher lows and higher highs in the intermediate. And what I mean by that is we just went straight up. Looking at this daily chart, right? We don't have any legitimate higher lows. If this was going to be more of a trendy, you know, well-established option, we would have seen something like this, right? Something like higher lows, higher highs, like that. That, you know, then I think it could have continued grind much higher. And then when we do get a pullback, maybe, you know, it will provide some solid pivot level. That's why these higher lows, higher highs are good, because once they start to form in that fashion, when we do pull back, well, you know, what you can see is that some of the level can actually become some kind of pivot or support. So problem with the S&P 500 is that we pretty much went straight up. So if this thing really start coming down, there's no support. There is no support. And I think one support I can see is this level right here, because this is all resistance level. That could potentially be a new support, right? That could be a pivot level. I think even this level could be, because this is a gap area. So I think this band of pivot, I think if we do pull back, that's a likely level that is going to come before bounce. But if we lose this level, again, we don't have any data as of today that we are even going to get there. So I'm just saying, if we do get there, and if we lose this level, then it could be very hectic, because again, do we have any kind of support here? Nothing. We didn't form any kind of support. It just went straight up. A lot of times when things go straight up, things can get pretty hectic here, right? But when you form higher lows and higher highs, it tends to be, you know, a bit more solid, and we can get a pullback and things like that, but it will find support and it can resume. But when we get a kind of a straight up bullish move and we didn't form any kind of support level as we go, so we didn't build any support, or, you know, so because of that, when this thing does start coming down, it can be very vulnerable at that point. But again, you know, we're not there yet, so we'll worry about that when we get there. But this is a potential level of a pivot or support if it decides to come down. But you can see that we kind of hit that 10 EMA, just kind of got right back above that level here. We're back at a resistance level again. You know, last time, what did we do? We hit that 10 EMA, we got back up, came down, got back up, came down, got back, and then we grind like this for about 2 months. So can that be possible? Yes, it can be possible. We can continue to do that. But I do think that sooner or later we're probably gonna have a pretty big decline. But the thing about it is we don't know that as of today when that's gonna happen, right? So we have insinuations, we have indications, we have signals that it is extended. We have some of the signals that we're seeing some maybe on the Russell, that there's some clandestine selling pressure, the hidden sellers or some secret sellers, right? And we're seeing, you know, that we didn't put, or we didn't establish any kind of support level as we went. So at this point, this is definitely, again, if you're a swing and position trader, this is definitely not a level start accumulating anything, right? This is definitely not a level. If you're a short-term trader, if you're a day trader, hey, you don't care, you just do whatever because you're gonna get out anyway. But if you wanna hold things, you know, a bit more than a 1 day or even several days, then I really don't think that this is a level to accumulate anything. Right? If you're holding certain positions, I would, you know, probably could continue to hold some of those, but then start to you know, take some load off of those as well. So I'm not going to go into all of the indices, but I pretty much looking at the Russell Spider, I think we established a lot of ground today. And so obviously benefit Dow continues to go to the buyers in the minor term, intermediate term, and primary term, obviously. So we would have to continue to respect that. But once we start to see a price action that would be, you know, that would go against our conclusion of benefit doubt buyers going to the buyers. Until then, we have to continue to look at the market, and that it could continue grind higher at this point. So, you know, again, Russell, I think Russell will be a key index next, you know, next few weeks here. If Russell starts to get below this level, I think Russell can definitely bring other indices to, you know, bring other indices down as well. But again, I'm not sure. You know, just because Russell's coming down, you know, a lot does not mean I don't think the other indices is gonna also have a steep decline. But again, we do have some flaws in the recent move, which I talked about, that, you know, it just went straight up here. So there isn't a whole lot of support. So again, it's tough to try to forecast things without the price action there. So I'm not gonna try to do that too much. But you know, we'll look at it next few weeks and see how we progressed since you know, today's move there. So let me look at Apple here real quick. Apple, you know, if I just go to this one here, this MACD here again, Apple's we got to that level. We haven't really been to that level in a while either. You can see last time we got to that level, we got close to that level was right here, this peak right here. And we got pretty close to that level once again, and we're pulling back. Just because we're at that level does not mean that Apple needs to completely roll over. And obviously, after this kind of move, you know, there probably was gonna show off. You know, there are probably gonna be some people trying to take some profit off of it. But you know, we found some support in 20 MA here and here. And so at this point, benefit Dow continues to go to buyers. It continues to go to the buyers in the intermediate term and primary term. In the minor term, we're just right on the 10 EMA. So I'd have to say it's a bit neutral because of this guy right here. This guy's still kind of hanging around here. So I have to say benefit Dow maybe goes to neutral or to the bears in the minor term. But intermediate term, we're well above 50 EMA. So benefit Dow continues to go to the buyers. And as I see anything else, I don't see much to work with right now. So I think, you know, as long as the NASDAQ continues to grind higher, I think Apple can continue to the upside at this point. But definitely, I wouldn't want to go long and start accumulating position for longer term position here at this point. I would rather see a bit more of a kind of a decline, maybe back at the 100 SMA right here. That would be kind of nice to come back down here, and then I think that might be better level to accumulate if you want to hold things much longer. But at this point, at this level, I wouldn't want to do that. I wouldn't want to hold anything there. Tesla, and here's the thing about it is, you know, many times people ignore this, and last time, you know, I've been writing, I written that article on this weekly bearish divergence. This is what I call 3 peaks divergence. This is a weekly, guys, which means it's gonna continue to drag this thing down. Obviously, bulls really try to make this, you know, to get this up. You can see 1, 2, 3, 4 weeks right here that it got up. And why is it just they were not able to really continue? It's because this unknown pressure, there is still a pressure there. This is something that I cannot ignore. This is the reason why I have not touched Tesla since I closed all my positions up here. And it just, and you can see they're still on a downside. This is a weekly chart, which means there will be some days where there will be 3, 4 days where it's gonna try to get up, and then it gets to a certain point and it just loses it. Why? And you ask yourself, why does it keep happening to me? It looked like it was going to do well, but why is it it's not doing it this time? Right? It's because of that. We have that kind of a big picture scenario. This is why we had a pretty good run here. And we filled that gap. That was nice. What it needed to do is come down here and gap back up and create a higher lows and higher high. Well, we didn't do that. We came just straight down. So here's a problem with Tesla. First problem is, you know, you can see that 200 SMA that has been acting as support. We last 200 SMA, and again, we last for 1 day. Just because we last for 1 day does not mean that, you know, because of that, now this thing is going to just do that. No, that's not going to happen. However, we have, you know, you can see 200 SMA here and here and here, and has been acting as support. We've gotten below that. So definitely this level, you know, we're seeing a bit of selling pressure here. Not only that, we are continuing with this lower highs now. Okay, we're pretty close down to this lows here. If we lose this level, okay, this is going to be, I think, last drop for Tesla. If we lose this level again, we still have a lot of room here till 215. If this thing start coming down, what we have is a massive scale of head and shoulders, along with this weekly bearish divergence that we've been talking about. You see that? Along with the lower high on the weekly term, right? So first we talked about this inverted, this head and shoulders here, the smaller time frame, right? Do you see this right there? Again, they'll never give you this perfect textbook like head and shoulders. They'll always make you a bit ambiguous. It's not so important as to what kind of pattern is that? Does it have a perfect pattern? No, it's the sentiment that's going to be important. What sentiment is at left? You will start making higher highs, right? And then it started making lower high. That's the whole point of head and shoulders. It made higher high and then it made lower high. That's it. That's all it did. That's what it means to have a head and shoulders. It's not just because we put a head and shoulder that it's rolling over. It's because the trend started changing. You know what I mean? It shifted. It wasn't an uptrend. Now it's shifting to the downside, which is downtrend with the first signal with the lower high there. But then again, the problem is we might get this huge head and shoulder. Do you see it now? Left shoulder, head, right shoulder. They are not confirmed. They must get below this level. Usually what happens is they break below that and it gets back up to retest the neckline. This is what we call neckline. And then if you get rejected again, they're not going to get rejected exactly at that level. It could get up a little bit higher and then get rejected. Then what we have is a lower highs. And then at that point, we'll come back down to about 170. And we have support right here. So it looks like if we do lose this level, and if the head and shoulder does get confirmed, I can see what's going to happen. It's going to come down here, find this level of support. It's going to get back up here. And if this level, we get rejected at this level, then we come down, back down here, and then we might even break that level, and we can't even come back down to 180. In that process, we continue to cultivate lower highs, which is in downtrend. Okay? So Tesla, this level right here, that's a must-hold level for the buyers. Buyers must hold this level. They cannot afford to lose this level, about 220-ish level, 220, 215, 220. That's a definitely level that you don't want to lose. If we start losing that, you know what's going to happen is you can see how this thing started coming down already. So you can see this pressure, okay? And not only that, we've broken that support. We got this going on. We came down here and starting to continue coming down. And so there's a pressure. There's unknown pressure. There's selling pressure. So it's going to struggle. It's going to continue to struggle. And market has been in bullish state. And we still struggle. Can you imagine what could happen when the whole market is starting to see some decline? That could be pretty ugly for Tesla. Another thing about that is that there's a support level here. We slightly gotten below that. And there's another support that acting as you can see here, 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 and then resistance there, right? All support becoming a new resistance. So we got all these signals that we have. We got lower highs, we got weekly bearish divergence, we got this potential, this massive head and shoulders, and we lost 200 SMA, we lost this support level right here, and so this is definitely not a level that I want to do anything with Tesla. Do I want to go short? I don't want to go short because I don't want to go short when this market is in bullish terms. So again, if I don't want to do anything short term. So if you're short term, you want to go short here and get out there, yeah, that's cool. But I don't want to do that. That's not my game. So I would rather see. I don't know. At this point, it's tough for me to say how I'm going to play this out. I was watching when this was going up, but what I wanted to see, I wanted to go long, but what I wanted to see is if we can confirm it. That's what I wanted to see right here, right? That's what I wanted to see. And in this thing confirming this level, getting above, that's what I want to see. So then we can potentially nullify any kind of topping pattern that we might have. But then we didn't do that, right? We just came down. And then we start breaking this support level right here too as well. So that's not a good sign. We'll do Facebook. We'll end this video. Facebook, again, just like Tesla, we have something similar. You see, this is the thing about it, is why Facebook continue to struggle. And this is what people not understanding is that this weekly term, this is a weekly term, right? And so obviously, you know, 1 week is not going to change a whole lot, right? This the thing about it is 1 week bullish day isn't going to make this go up like that. Because of that, there's a pressure still there. There's still pressure, right? There's higher highs and higher or lower high. Okay, and also, oh, you know what? I forgot to tell you guys on Tesla here. You know what? I actually had a, never mind. I'll reveal it on my next. I was gonna write an article on Tesla, and I'll reveal the chart there. It's important chart, and that it doesn't look good for Tesla. I'll reveal that on my article. I'd probably write it tomorrow or even this weekend. But anyway, so Facebook. That's the thing about it. Like you can see how on a daily term, we had this bullish move. Right, and we even got above this resistance level. This is where a lot of people get that entry, right? That's their setups. We clear the support. We're gonna come fill this whole gap, and then they're gonna go long right there. And then what happened? Doji, evening star, boom, right? And that kind of stuff happens because you know and that kind of stuff can happen anytime. I agree. I get that. In this market, anything goes. But as far as the probability is concerned, this is the reason why, you know, when we got done with Facebook, you know, somewhere up at this level, we didn't touch it the whole time, because as soon as I saw this, you know, we have bearish divergence happening here on the weekly term, it's gonna get difficult. And it definitely did. It went up, well, it came down with earnings, and then went back up, and then it just, you know, it all of a sudden, why? Did you ever ask that why? What was the reason for that? Everything was so great. Why do we do this? You know, and again, sometimes there's no reason for it. There's no explanation. Just things happen. But with this again, this bearish divergence on a weekly term, it's gonna struggle. And we have this uptrend here. We're barely kind of, it's tough to draw there right now. You know, is it gonna be that? Or is it going to be this? We don't know at this point. But I think, bottom line, if we lose this level right here, I think that's a more potent pivot. All resistance became support, and we're holding that. We lose that level. We lose this level right here. It's going to get very hectic for Facebook here. You can see we also have a somewhat looks like Head and Shoulders, right? Again, they don't look like textbook. They never do. What it's saying is we create a higher high, but now we're creating lower high. That's all it's saying. That's all it's saying. When you look at Head and Shoulders, it's happening because it's Head and Shoulder. Head and Shoulder doesn't mean a thing. Head and Shoulder, what it's saying is if we start to form higher lows, but now it's forming lower high. And then once this level, we break below this level, and this level gets confirmed, and then gets back up to retest this level, and it gets rejected, then it can be the next level support there. Again, I'm not saying that's what's gonna happen. All I'm saying is as long as we got this right here, I'm not looking to do anything. Why don't I not want to short? Because we're in a bullish market. We're in a bull market. I don't want to short anything because then it gets hectic. We get these spikes and it just makes things much difficult. Like we come down, we start coming down, and then we get these spikes. You know, it's just difficult. If we're in a bear market, I'll short, but we're not in a bear. The indices that we're in this market is not in a bear market. We're still in a bull market. Very, very strong bull market. So what I'd like to see, I'd rather see index pull back down and then start to accumulate positions when we start to see the bounce back up again. Right? So that's everything. I hope these videos will be helpful to you on your journey and endeavor in this difficult market. Let me know if you have any questions or any comments. You can leave that in the below comment section. Have I forgotten anything? I don't think so. So well, anyway, have a good evening, and next week, again next Wednesday, right after market close, the room will be open about an hour before, so you guys can come and chill. But we'll have a live midweek update, and feel free to come out and hang out with me, ask me any questions you might have, and we'll take a look. We'll take a look at Apple. We'll take a look at Tesla and Facebook and other equity indices next week and see how we progress since today, and we'll go from there. All right. We'll have a good evening, and we'll talk soon.